Hey everybody, good to be back here with you. Mike Fairborn here for Swing Trading. Today I wanted to talk about, looking broadly at the markets, tying in a couple of different time frames, something that I normally will do within my trading investing, and that's looking at different time frames to see, hey, are there ways to look at different probabilities or just different expectations about a potential income? Yeah, if we're seeing something occur on a larger term time frame as well as a smaller term time frame, that could be daily, could be an intraday time frame, looking and combining those elements to try to get us more information, layering those time frames for more insights here, folks. Still building on everything we've discussed thus far in this class, but adding in an additional time frame in there too. So, looking forward to going through that with you. It is good to be back with you. I do look forward to this class each and every week. Hello to you, Kenneth. We've got Jay Richardson, Andrew, around Buffalo. We've got Ocean Life, BJ, and Joe. Good to have you all on board. Looking for any questions, comments that you might have. We have a good friend of mine in the chat joining us, Cameron May. And folks, you can follow us both on X, Cameron May CS. Definitely take a look at what Cam's got. My X handle is Mike Fairborn CS. Well, let's look at market conditions here momentarily, but we'll start off with some disclosures to get the show on the road. Folks, information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk. They're not suitable for all investors. Spread trading must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs. Now, short options can be assigned at any time, up to expiration, regardless of the in-the-money amount. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application is for educational purposes only. Now, investing does involve risk, including loss of principal. There's no guarantee that an execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. And having said that, we're going to turn over right now. I want to take a look at the S&P 500 here. I want to talk about where we're at on the S&P. I think just real briefly here, just for general context, in terms of direction that we might be looking for possible swing trade action today, though I did want to look at actually bullish and bearish example trades. Of course, we'll do a review of our existing trades that we have done recently, like we did last week. We did a couple of those. We'll see how those are doing. But right now, hey, you wanted to, and you guys, I talked about this last week a little bit, and that is, looking at this 56.60 level. I was talking about that and say we were really struggling at that last week. There was 1, 2, 3, 4, 5 touches. That is, all right, let's go ahead and put it down there. Might as well. It's a big number. There were 5 touches right along that 56.60 resistance level, which we gapped above. And as you guys recall, what was the other big one we were looking for? I know many of you follow it. I could tell you a lot of market technicians will look at it as well, and that's going to be, how does that keep getting erased? I'm not sure, but I'll keep adding it on each and every time. The 200, there we go. In fact, we'll put it on right now, the 200-day moving average, and there it is. Hello to you, Wrong, just joining us as well. Look at that. There's our 200 right there. Broke above that level. Gosh, where are we at? We kind of touched off it a little bit today. Will, good to have you here. Beth, Greg, Mighty Mouse, great to have you all on board. You just caught us right in time. We're just looking at the market real quick for some general perspectives here. Real quick, though, just briefly, wanted to hit that. I know you guys have hit this plenty of times during the day, and I'm sure you pretty much looking at it very closely. But getting above the 200, that's our 200 right there, as you know. But getting above it is oftentimes seen as a bull, and getting below it is a bear. It just so happens we're right smack, right at it. I guess technically we're just slightly bullish. The question is, can we get above it and resume what is actually a fairly long upward extended trend of the SPX? So that could be the first indication. Remember, we bounced about this one time previously, right there. Wow, dang it. 2-year will show it to us, and then we'll be all set right through here. So these longer pullbacks are just bound. They're just bound to hit a 200-day moving average if you go down long enough. The question is can we really reverse and get above there higher? Just one last thing to keep in mind before we get any higher over here. Although there are some companies that are showing some strength, look at that. There happens to be that last low. And I just want to say the last low We don't want to miss that low. It's a low there, and do we need to get back up above it? Well, it is a resistance level. For us to trend higher, yeah, we've got to get above that level. Let me give you a mark on it so you can actually see using Thinkorswim. So we got this. So that mark right there is about the high point that we hit today, or right along there. It's real close to 57.80. 57.80. I'm just going to mark it so that we remember it. It's always easier for me to remember stuff, even if I just take real simple notes. I'm going to do it for all of us right now. 57.80 resides right through there. So yeah, it's right around the 200. There were really kind of just a confluence of resistance points, but those were big resistance levels, and we'll want to see if we can get above those for the longer term trend to stay in effect. All right, well, 2 trades last week. Let's review them again within this class, the swing trade time frame that we're looking at, which is always been of huge interest to me, and I think many of you as well. We're looking to capture bull flags, inverted head and shoulders patterns. We're looking to look at, double bottoms, triple bottoms, diamond patterns, if you're not familiar with those. But each of them on a daily chart, really rolling about 3 days to about 2 weeks worth of trading, 3 to 10 days. Okay, so we're really just trying to capture the meat of the move. Folks, nothing's going to be different today. That's what we're going to look at each and every time we're in this class, that move. But across a multitude of different price patterns will we be looking at for really kind of what's been referred to as the strength of the move, the meat of the move, really the big runs on a daily chart. We're just trying to capture those as best we can. Generally, as a swing trade in this class, that's what we're looking for. In fact, on the S&P 500 index, this time frame, you can see all these little flag pullbacks here, but look at them, just flag. That's a longer term flag, but that reversal to the upside is what we're most interested in. Now, we had a couple that we looked at last week, right? We had a couple. In fact, we set out a couple of polls, and I think you guys did great on the polls that you selected. The first one, we were looking at AT&T relative to, it was T-Mobile. And this was the trade we had here. In fact, if I pull this down, where are you? The trade, we did have T. I know we had AT&T in here, and we are still in AT&T. It's been a tough week. It's been a rough week for us. And let me go back here for just a second. We're just going to look and just see here something real quick. Yeah, I just wanted to see over this time frame. T and NEM were the two we looked at here. But we kind of came up to this high. We're still just sort of bouncing around. Remember what we talked about here? There were 2 different time frames. This is the flag pattern, by the way, as you can see it over here. Here's that big run up. And we said, hey, there are 2 potential targets for the possibility of a flag pattern follow through right there to the upside, right? And we know that there was a T1 over here. That's up to this level, around 28. That's up to the prior high. So this high up top here, we're going to go ahead and label this target 1. Target 1. We didn't hit target 1. We came close today. We kind of shot up a little bit. These have actually been holding up actually quite reasonably well given the current market situation. Actually, all else being equal, we've had a lot of volatility. So this flag pattern is still held up. Notice we broke this downward sloping trend line. So as I extended the y-axis down a little bit, remember the other time frame? Much higher. It can be much higher for the next leg up. That's our T1. We did not hit 28. And within this class, we always say, hey, within these practice trade or these, paper money trades, some of you that are putting paper money trades on might decide to elect to say, well, I'll take a T1. I'll take the T1. I'm not feeling too comfortable. I'll take half the position off at T1, for example, would be another way to look at this, right? The next one, again, can be substantially higher, which a lot of traders will really look for with that flag pattern, and that is the full length of this move coming up. We're still in the developmental process of this unfolding, but you can see over here, prices really, could take this same price move measured off this bottom to the upside. I've kind of tried to eyeball it. It's somewhere maybe up in this range, but that would be T2, target 2. Okay, now last week we said, let's put a moving average on here, and we can kind of track that going higher. Perhaps would be one way to do this, a simple moving average in terms of a possible exit scenario here because we're in the trade right now. We want to see what that exit could look like. In fact, yeah, that should look pretty good over here. I'm going to go ahead and just throw this as a 10. Did in fact we get below the 10-period moving average? No. And we said we can put, I have the stop listed way down here. That was our original potential stop exit level. Not a guarantee to get out at that level. These trades, these orders do compete with other existing market orders, as we mentioned. But one thing that traders can do, because our expectation here should be a follow through, correct? Isn't that what we're anticipating? Isn't that why we're in this trade? We think that this is the flag portion of the move. It's given us some really good insight that it might be. We broke this downward trend. We had a close above the high, the low day. We had a fractal pattern that we've talked about. We've had a 2-day higher high, or excuse me, a higher low here, and we've begun to run higher. As a matter of fact, we've even broken this prior high. So there's a lot going on here. So what many times we'll do is we might just grab that stop level and just pull it up below. Let's go ahead and send that through this prior low or raise it up a little bit. Normally, what we won't do is we won't use the 10-period moving average as a possible exit level until we break above T1. So if we get north of T1, we want to give it a little bit more flexibility on the leg up because there could be a substantial run in here, right? It could be really, really big. And so what we're doing is we're using this as sort of a backdrop and saying, let's give it some flexibility because if I were to draw this moving average in over here, it might come up over here and it just kind of slowly goes higher, just like we're talking about over here. You see that? Do you see how that 10-period gives it the flexibility to move after we've begun to break higher? There's your T1 if you're using this as a flag pattern. Now we revert to this as a potential exit. Okay. So we're not there yet. That's why I am, we could raise it up a little bit more if we wanted to still, but I'm just at least raising it up off to this level, and we could continue to raise it up higher as prices are going up as well. But just some thoughts on that one. Still going up. By the way, remember the other one we were looking at, T-Mobile? T-Mobile didn't do as much. Didn't move as much. It didn't do as much too, but it's still kind of holding in there. Some of you might be still looking at this, although this was part of our poll that we'd run through. Still might be looking at maybe a close above that level of interest. And I'm just going to do this just so we have this in mind, because technically, look what we're getting. On this pullback, we're actually getting, that is actually technically right now a higher low. Now, do we have a higher high yet? No, but you see the formation of that flag pattern still in existence and really staying close to that 10-period moving average. So why don't we use some of the technology behind the Thinkorswim platform to help us out a little bit here? In fact, I'm going to do this. This high right here would be very interesting to know if we broke up above. I'm just going to simply right-click on there, go down to create an alert, and have it text me, is it breaking higher? Question mark. And that's going to be the actual message that's going to be sent to my phone. Breaking higher here. But you see how cool that is? That's really quite nice. And again, you can set all that up in the setup up top here, application settings. Go over here to the left-hand side. I'm sorry, up top though. First and foremost, go to notifications. You're going to throw, your number in there, and you're going to be good to go. Okay? All right. So having said that, this is where we stand. That's our general setup here. And okay, that was T-Mobile. We didn't get into that one, and it actually did not run the way that AT&T did. So you guys called the right one there. NEM was our next one we looked at, and this one we did an OCO bracket order on. Do you see the flag pattern? I always want you guys to recognize the pattern first. Just get your eyes used to that. I know many of you already are, but some of you that are new for the first time and are just saying this fairly recently. I mean, there's your flag right there. And gold prices, although I can't show you gold here, they have been breaking up and going higher. And look what we've got. We've got NEM, Newmont Mines. Wow. We did hit our T1 target right there. And so where's the potential rally point? Where's the T2? Well, we've got that's our OCO potential exit point up top there, right there. There's T2, our limits right there. We've been doing okay, but because we hit that level, we still came back and we said sometimes there's a little bit of a pullback here, and you can see it. Look at that. We hit it and we pulled back. Did we hold above the 10? We did hold above the 10, and that's exactly why we use that 10 period, 10 day or moving average or 10 bar moving average, whatever the case is. Okay. Because we're holding it and we're thinking perhaps, hopefully that this is the expectation we were looking at or trying to get. We're trying to get a run up to T2. But that is our potential exit point right there. So what do I have to do? I'm going to raise my stop basically to that level right there, because that's where the level's at. So right now we're really just planning on this other minor, small flag pattern right here. Let's highlight it. Again, another one. So really a flag within a flag right here with the possibility of breaking higher. What's interesting about this, and I'm just going to get us right now into our multiple time frames here a little bit, or in this case, multiple patterns too. But we have a long-term projection, which I have with these yellow lines, and you can see that's our target here. Now, so there's a bigger picture flag that might be unfolding, but within that bigger picture flag, look at this with me. There's a minor flag, and if I made a full extension, guess where it puts me? Very close to our big picture flag. So you've got kind of a little one building up within a big one, and as a trader, as an investor, I think it's always interesting. It really is. It's always interesting when you get a flag pattern. And it could be particularly interesting inside of another flag pattern, because the flag pattern is what we're really looking for a follow through of the trend. Flag pattern, strong move up, mild move down, and we're seeing if we can get that. That's the question. Okay, and so we're looking at a few things. Any questions on that? You guys with us on? How are we doing on this one, by the way? I think we're, yeah. So it's been a tricky one. We hit our T1, and like I said, some of you may have taken the T1. Well, I think I don't know if when we put, might put that on last week. So I think we're very close to it. But anyways, we put the trade on, and it's past T1. Sometimes that's the target that's taken off of a bottom move. In this case, we're looking for a T2 potential target as well. Okay. Hey, one thing I wanted to point out too is just coming back here real quick on T. Now you'll notice that AT&T is giving us that volatility squeeze. And all I'm saying with volatility is price contraction. That's all we're looking at. Many of you guys I know, let's say we'll go to, say for example, a picnic, and there's a watermelon seed. I used to do this as a kid. I think we probably all did. But you grab that seed and you squeeze it. And when you squeeze that seed hard, it's gonna break out of the move. It's gonna go up or it's gonna go down. We really don't know. Sometimes you get that same sort of price action on the chart. It gets into a tight range. The range over here, the bar range, gets tighter and tighter. You'll notice that the TTM squeeze uses a couple of different indicators to help indicate the tightening or the compression of price. In other words, the high and the low of the price is getting into a tighter and tighter range. And what's interesting, it's really just the Bollinger Band decreasing in between the Keltner channel, which is a very sort of a rare event. It doesn't happen too often, as you can see over here. You can see some of the big moves might come out of a compression. You notice you were in this range over here, kind of a flag pattern, and you broke out. Well, this is another sort of an indication. When it turns green, that means it can expand out of that, and those are really interesting to see when they're also in a flag pattern too. Look at this over here with me. Here's CAH. This is one that came up. You'll notice that it was within a long extended compression range. This price is actually tighter than it normally is, highs and lows. But then it began to break out, and it looks, it helped to coincide with the bull flag. Not all of these will be bull flags, but it's interesting when you find those, and sometimes they come up here and hold support, because now this means that there could be price extension. The reason why I bring this up is because I did teach a class, and I was thinking about you guys when I did this, because we did talk about this in pretty big detail. If you go to the Thinkorswim webcasts over here, I'll just point out where this is. It got posted a little bit late, so you might be interested in taking a look at it. It's just the squeeze breakout that we've got here. I'm gonna go ahead and just throw this in if you want to take a look at it. But the only reason why I bring it up is I think it could work well with what we discuss in this class. So I've got the code in there that creates a column basically over here for us. There it is. I just called it the squeeze reloaded. We'll just show you how many days out. This is like 3 days past the squeeze. And so these could be very, I mean, they could be interesting because they had been in a squeeze for at least 3 to 5 days. And now they came out. It's been out of that squeeze for 3 days, for 2 days, for 1 day. You have it as a column here. Now, our scripts aren't guaranteed for timeliness or accuracy, but let me just put this in here in case you do want to take a look at it. I don't think it was posted time. I just want to make sure you got it if you want. It's just the top one I've got in here, but this is the playlist for that class. Squeeze breakout is the top one, and that's the link right there. Okay, now I didn't want you guys to miss that because I think it can be very, very helpful with flag type patterns. It can find them, it can spot them, because you're waiting for that compression to hit and that explosion of price. And that's one indicator that traders will use to help them in that regard. Okay, now let's talk about our new trades for this week, because I think pretty much steady as she goes for the first 2 trades that we've got right now. Correct? I mean, it's still the flag's unfolding. NEM is still, potentially unfolding. Like I said, there's been a breakout in gold, and gold's higher, so it might continue to lift some of these stocks higher as well. All right, well, having said that, let's look at some other areas. Now, I'm going to go right into Dr. Pepper, Keurig Dr. Pepper here. There's a little bit of a longer term basing pattern. You'll notice too that guess what it's doing? What we'd kind of expect is price compression, a smaller range, which we generally like to see within a flag pattern, because then we might get this kind of a move. You could see that the compression ended and boom, we really took off right here. And maybe that's what we'll see again over here. But let's take a look at a little bit longer term time frame too. In fact, I'm going to go to a daily chart so you can just get a bigger perspective. We've been down for a little bit here. There has been a tendency with Dr. Pepper, to kind of go into a sideways channel. And there might be a measured move off the bottom here. Let me show it to you. Look at this. So if I use yellow, if I said that this is a flag pattern here, and we had a pullback to a flag pattern, we came back up here, we're getting very close to the top of that measured move, aren't we? For a T2 target. Again, these are kind of like, some of these that are flagging now are like kind of like defensive plays, or even like, gold miners. But this is sort of like a consumer staple. And you can see off the bottom, do we have a trend building? Higher highs and higher lows right there. There's your trend. Sideways. Now, you guys, if we were just to step back here, can anybody see anything else that you might want to see prices? It could be an indicator for prices going higher here. What else do you see here? An indication maybe on the chart that you'd want to maybe see first before it kind of signified a move to the upside, if in fact it does. But we're just looking, is there anything in addition that your eyes might be glued to? I'm going to point out a line. I know there's a little bit of delay in the chat, and I think many of you see it. In fact, I know you do. Look at this. Touch point. Touch point. What am I talking about here? I'm actually talking about the 200-day moving average. There it is again. There's a lot of the 200-day right now we're seeing in the market. That's a 200 DMA, day moving average in this case. And look at this. Stop, stop, stop again. Fascinating, because why? Well, we are getting higher lows, and it looks like a little bit of an ascending triangle too, plus the possibility of a bull flag. But shoot, we want to get above there. You got it. Gary, yes. Resistance break, absolutely, Chuck. inverted head and shoulder. I think I'm seeing that too, right through here, here, and here. And we're getting close to this level. You guys got it. Yep. Alan, Keith, you guys got it. Exactly. So that's what we're talking about right there. All right. Now, multiple time frames. I really want to hit this and stress this hard today from here on out. And by the way, I appreciate Chuck bringing this topic request up. I thought it was a great point. It's something we can really tap into with this class. Now, you guys up here, you'll notice that I do have in my grids, I've got the daily. This is what this stands for. This is my daily, my weekly, and my monthly. Okay, longer time frames, right? They expand out in time. Over here, for this very reason, I've got a daily, 30-minute, and a 5-minute. Now, these are the ones I tend to gravitate towards a little bit. Are those KDP? I'm going to head back to it right now. Daily, 30-minute, and 5-minute. Now, I am regularly looking at weekly chart patterns and then daily chart patterns, but also we've got to be mindful of the time frame that we're looking at here. When we're talking about swing trades, we're just trying to capture the meat of that move, right? Just the flag pattern coming up. So what's nice is I was able to clear off all the moving averages here so you can kind of just see that flag pattern. Let's clear it off again so you can see it. Okay, possibility of a flag, right? Higher highs, higher lows, the trend is behind us. So we like a trend there. We broke out above this range here. And like I said, if you look back big picture, there's a little bit of this going on. A measured move. We've been in this range for a while now. That's a multiple time frame. That on a weekly chart is a multiple time frame. We've been in a sideways channel and we're saying we might be seeing a follow-through retracement back up to this level because on a weekly chart, we've seen this for a while now. Okay, it's not perfect, but there could be a measured move in there. Okay. Now, I want to drill down into a multiple time frame here and say we have a really good idea that a 200-day is right through there. I may even add it back on again here, but let's just look at the 30 and see what we can take from this. Is there any additional details we might be able to spot on a 30-day, 30-minute chart? Okay, now what I can tell you is that, and one of the reasons why we're doing this is we can get better indications because we're getting more information. And with that, there can be additional signals that we can take a look at here. On a 30-day, 30-minute chart, there's just a lot more data. What are we getting, like 12 more bars relative to what we'd normally get? 12 to 13 more bars or so? Look at this. I'm going to try to draw this diagonal line. Okay. That is an ascending triangle. Very, very difficult to spot on a daily chart. But if we drill down into a 30-minute, it becomes so clear with that additional data. Now, what do you think would be so interesting here in terms of the possibility of a breakout? Now, you can really see it very, very closely. It is at 34 or very close to it. So a break above 34 could be the signal. We spotted here on a 30-minute chart an ascending triangle. That's what that is. With this too, if I add in the 200-day moving average, or we knew where that was at, it's slightly above this level. The other thing I'm going to say is that we are getting higher highs and higher lows here. And a lot of times if you're approaching a resistance level, we can really see it here. Look at this. Here, here, here maybe. We don't know if it's going to break up again, but it's showing that it's holding, 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 and maybe could make a formidable attack at that resistance level. That is a really interesting question to see if that breaks out or not. Okay. That is a multiple time frame perspective and what we're looking at here. Now, the next thing I would say, if I go to a 5-minute, and I'm really breaking this down now, where might that move occur? And if somebody is expecting, now, right now, I don't know if we want, sometimes we're not buying so close to resistance, but I still want to go through that process today because somebody could look at a 5-day, 5-minute chart, very, very short term, and still set up, let's say, risk and reward parameters around that and really try to risk little relative to the upside potential. Case in point, let's do it right now. If we broke out above this range right here, let's do it. Let's go ahead and pull this up. And I'm going to just draw a trend line here. Now, this is on a 5-day, 5-minute chart. So this is a 5-minute chart here, but that could be really, really interesting to know if we got a breakout above this level. I'm going to right click. I'm even going to put an alert on a trend line. I don't know if you guys knew we could do this, but yeah, we sure can. We can do it. Doesn't have to just be above horizontal support or resistance, but we could say trend line break, question mark. Have that, have them give us a call on that if, or excuse me, text us if that breaks higher. Okay, now here is this move here. If we get a break above this level, where might the target range be? Well, I mean, we said there's resistance here, but we had actually higher hopes of a really, really big run to the upside. I mean, well, in terms of let me just show you this. There's our daily chart. Where might this go on a daily chart? Right up here, we said, that's actually quite high. There's the pullback, and we take that same price range here, and we just add that over here. It puts us right up to our measured range, our measured move potential, which is just this whole range that we've weekly run into. Okay, we've gone into that range. And so imagine if we had an exit on a 5-minute chart, so short, but we're using a flag pattern on that 5-minute chart with the potential for a T2 target. Now, it's still got to hit a T1, but we could have a T1 target as well. T1 could be right through there. Look at that. So that's your high. So here's the T1. Bam. T1. I've got T2 up here in blue. We're setting this up around a 5-minute chart, though. We've narrowed it all the way down to that level. So if you get a break above here, let me just draw this out. If we break above and start to get going, and we could wait for it to take out this high, or even this high, but our potential exit level would be right there. Look at that. I'm going to do the first scenario here just so you can see it. If we were to break and close above this level here, right there, okay, that could be, let's say, if on a 5-minute basis, so let's say that right there is the possible entry point. Here's the exit point, but on a 5-day, 5-minute chart, if I'm using that level, let's go back over here. I'm going to tell you exactly how much is being risked based upon a stop order, right? Right there. Wow, that's like 12 cents. It's so small, right? But notice we're setting this up around the possibility of a larger time frame follow through to the upside. Now, you don't necessarily have to use a 5-minute chart. You could use a 30-minute chart, which could give maybe some additional confirmation in there. But if it can break this during our time while we're here, I'm going to go ahead and put an entry on here, right there. So I'll just say like an entry right there. But yet our exit will be so tight, but we're building that around a longer term daily possible question mark flag pattern to the upside. Okay, and that's what we're going to be looking at. And this is going to sound off as soon as it breaks above there. Like I said, though, we could wait for it to break above the prior high. No, hang on. Prior high right here, like break above 5-day, 5-minute. Yeah, that should be there above this high too. So here's the trend line break, but then right there is your high as well. So it just depends on what you're waiting for in terms of confirmation, but still you can see how close you could keep a potential exit level. That's still not a lot. Even if we were to go higher like that, let's do this. Let's go on a 30-minute chart. And I'm going to show you this. What if we're using a 30-minute and we say the price of the stock goes up to this level? So let's say you get a trend line break and you get above this level. Okay, so we get in like either here or here, and our exit would be below that low. Yeah, there's 13 cents. It's like a 5-minute chart. But if we wait for it even to break above this high, we could say that this is the low, and that's 24 cents, in terms of the potential risk level. So it's a way to manage the risk as you shorten that time frame on down. Let's see if we can get a signal here. The whole idea is to get an entry point while we're waiting for it to go on that 5-minute chart. We shall see if that happens. But right now, nothing. And guess what? We don't have to do anything because we're on a 5-minute flag, perhaps, and we're waiting to see if we get that entry and that flag still in check. So there's nothing else we have to wait for. We'll let the market have a say and tell us potentially when that entry point is ready to go. Okay. So I'm going to hold off on that, but I was going to say, I'll go ahead and take that entry, generally speaking, if it sets up, even after our class is done. Let's say if it happens tomorrow or the next day, I'll go ahead and do that. It's very difficult to always get it to line up perfectly during our discussion. Okay, next one. Any questions on that? Throw those in. We'll take a look at them. Here's another one, ELV. ELV right here. Do you see the change in trend that we always like to base it on first? Where's the change in trend? I'm going to go ahead and highlight. I think many of you already see it, but it's like right here. You get that higher. It's not a higher high yet. Well, I guess it technically might have been. There's certainly a higher low. That's a higher high. So whether we got it here or here, it's a higher high. And now we're waiting for this pullback and indications here, what we might be able to get. We can narrow this down and really take a look at that and see. I'm going to draw this in here so we can see it. Watch this. I'm going to put a support range right there so we can see that on our 30-minute chart. So there could be support here. I use this on a multiple time frame on a daily chart so you can see that there's support. Historically there's support there. We'll see if it can hold. But now notice what that does. It gives us insight that, yeah, there was a lot of price kind of congestion right in here, which we in fact broke out of. This could be the support, but now you're seeing it on a much, much shorter time frame. And we'll see if it, maybe it comes down here, holds, and begins to bounce. And then you might get a close above the high to the low day, a trend line break. And this could be an early entry. And again, maybe a better measurement in terms of what you're willing to risk here with a bigger possible picture upside move. What is that upside move potential? We just saw it right there on the daily. It's the flag pattern. Let's pull it up and take a look at it right now. There's your flag right there. There's a flag. We think it's flagging perhaps right now. That's the question. Is it a flag? Now, do we start to get that intraday or that shorter term time frame, 30-minute, 5-minute indication, which we're measuring our risk of on a shorter term scale to maybe capture that bigger move? Oh, yeah, it puts us maybe up in this range, closing that gap level. Like I said, look at the possible reward. Substantially higher reward versus the risk down here. Could be minimized. And that's just true with the flag pattern in general. But using multiple time frames could be really, really quite helpful. Okay, I don't have the signal on that, folks. It's incredibly difficult right now, the way the market has been, to get like a flag pattern entry. Some are very, some are interesting in terms of maybe a bounce. We looked at CAH, we looked at KDP. This one could be very, very close as well, possibly. We're past earnings, it looks like here for a little bit as well. It broke above some highs. KDP. Waiting for a break here. In this case, we were waiting for a trend line break on a 5-day, 5-minute chart using multiple time frames. Is a different approach. And then ELV. Are we going to get a break there on a 30-minute, perhaps? Trend line break, close above the high to low day, something along these lines to get us going there. So a few things to really be looking at. Like I said, it's tough to get it all within our 40 minutes of meeting here. But that is one that we could certainly consider. Now, by the way, quick note on this ELV. Okay, we're on ELV right now. Let's go back to a daily chart. I want to show you this because I think there could also be, and it might be easier to see actually if I go back to a weekly here, ELV. Look at this. You guys see this? It's a little bit, okay, shoulder, head, shoulder. It's close to it, which means that we might have a weekly time frame which is a longer time frame. Look at this range right there. From high to low, that would be the target, potential target to the upside. Right through here, or very, very close to that level, possibly around 480. I don't get the exact number there, but you guys catch my drift. So not only a flag pattern, but we might have a multiple price pattern that's occurring here. That's daily, isn't it? Let's show you weekly. Sometimes it's so easy to see on these weeklies as well. So, well, a little bit, yeah, I'd say the daily actually has a little bit more data to kind of take a look at. But we had kind of a shoulder here, head, and then another shoulder. We broke above the neckline, and there's the possibility of, like I said, this move, which is the height of the low, up top here. So some of these might be, possibly better positioned than others that don't have such a thing. But something like that could be helpful. All right, let me just see. I'm taking a quick peek here. Very good. I think we're all on the same page here. One thing that we are saying too with the market dipping, kind of finish up on this a little bit, but when the market dips, sometimes there can still be the potential around resistance over here for a bear flag. And that could be a move over here, possibly down. There's a lot going on in the market here. In fact, let's pull up this one, ADSK. This has actually had a little bit worse than the market, lower lows and lower highs. The trend is down. And so when prices are coming up here, the possibility of a breakdown could be something to keep in mind right there. Does it break lower? Because that could be a bear flag, kind of like we just saw over here. We could see another bear flag. So there are some of these developing out there. Folks, this is important information for you to get down. Multiple time frames, it's probably the deepest level that we've broken into thus far, but I wanted to build up into it. I appreciate Chuck bringing that up as a potential, topic request. Smash that like button. This is something you guys, I think, could definitely utilize for the possibility of additional signals for an expected move to unfold. Now, I just kind of like naturally, I've been doing this for a couple decades, and so a lot of times I will look, that's just my normal thing. I just look for a weekly, kind of filling into a daily, and we'll just keep doing that too each week as we go through this. But I think that can be helpful for you to kind of set these up right now. We looked at three really that could be setting up, on the bullish side and wants to keep an eye on, and I will place those if we do get our signal on those. But like, for example, again, that CAH was one we looked at. In fact, we did, KDP and ELV. We didn't even get into the options aspect really at all on any of these, but I was just going to point that out to you that we have, explored options previously, and we've had some option positions. We just don't have any today to look at, although they could be put on the chart. All right, be sure and also smash that subscribe button. I don't think we had a survey, but if you hit that like, it really does help me understand that this is informative and useful for you guys, and hopefully it was. Again, here is. I'll just put this into the chat again if you did want to capture that. I've got the code in there that you can tap into and learn about that indication as well if you want to take a look at that. But that was on the Think Script class. And again, those scripts aren't guaranteed for timeliness or accuracy, folks, but we'll keep a watch on these trades and we will add them in if we do get those signals throughout the remainder of the week. It's just a very, very tight range we're looking at today. On that note, hey, thanks so much, Cam, for your help in the chat. It was quite active. Really appreciate that. And hey, we'll look forward to future discussions with you all. Take care, all.